Nadex knockouts are easy to understand contracts and a powerful way to access market price action while giving traders the ability to manage risk exposure and manage efficient use of trading funds. At their core, Nadex knockouts are essentially a pre-built trading plan with clearly defined levels to automatically exit a trade to either lock in profits or limit losses. You can either buy a knockout if you think the price will rise, or sell a knockout if you think the price will fall. The price of a knockout will move directly in line with the price of the underlying contract. Each knockout trades within a set price range, with a lower price level referred to as the floor, and a higher price level referred to as the ceiling. If the price of the underlying contract touches either the floor or the ceiling of the knockout, the contract immediately settles and you're knocked out of the trade. That's why they're called knockouts. So if you buy a knockout and it touches the ceiling, you're knocked out of the trade for maximum potential profit. However, if it touches the floor, you're knocked out and you've stopped your losses even if the price continues to drop. Conversely, you can predict the price will fall, and you can sell a knockout looking to potentially profit from a downward move. If the price does indeed drop and touch the floor, you'd be knocked out for a profit. While if the price instead goes up and touch the ceiling, you'd stop your losses. Knockouts are initially set to have a weekly expiration. As different knockouts settle during the week due to price movement, additional knockouts are listed. Any knockout that doesn't settle due to price movement will expire at the end of the week, and at that point, your profit or loss on a knockout would be the difference between where you bought or sold the knockout and the settlement value at expiration. Because the risk of a Nadex knockout is known before entering a trade, the capital requirements, or cost, to trade a knockout is the maximum risk, which is calculated for you on the order ticket. Once you've initiated a knockout trade, your capital requirements will never change, so there are no margin calls, ever. With clearly defined risk or reward levels, knockouts allow traders to choose the risk-reward ratio that suits their trade and is comfortable for them. And with the ability to select a knockout with the lowest amount of risk, traders can decide how to best allocate and leverage their trading funds. Nadex knockouts can be a great way to access market price action while efficiently managing your trading capital, minimizing your risk exposure, and maintaining trading discipline with a predetermined exit strategy.